The economic data we receive from every country is most likely fake, or at least padded and puffed up to make it seem stronger in times when it's weak. Well, according to Brookings, China has been handing out fake economic data since at least the financial crisis. Perhaps this is only the beginning to seeing some real truth being uncovered, and that's why you came here for the truth, so let me unveil that for you. Today we are going to look specifically at China. I want to focus our attention here. I found some information I believe that you will be interested in, so let's dig in. If you remember a little while back, I had done some videos about this, and also you've seen it in the news, I'm sure, but there was fake data that was coming out of these different areas of China, and essentially they said that they would be cracking down on it to make sure that it is legitimate. Well, apparently not. It seems as though the data that we have been provided has been an issue not just for one of these regions that admitted that these statistics were faked. No, it's a widespread problem. So Brookings has this report, I'll show you it in a second, but the Financial Times wrote an article about that and they made some good points in here, so I want to touch on those first before I show you the charts. The research concluded that the official data overstated growth of nominal GDP by an average of 1.7 percentage points per year between 2008 and 2016, which made the economy 12% smaller in 2016 than official figures indicated. 12% is a big number, and that's what they were able to determine from the statistics that they grabbed. Who knows what the actual real numbers are, but I do think it's important when you have this kind of information that you highlight it and that you focus on it and see what else could be there as you start to uncover more. In real terms, GDP growth was overstated by 2 percentage points in the same period they estimated. But Mr. Song cautions that he and his co-authors have less confidence in their estimates of real GDP growth than the nominal figures. Of course, all of this is based on their own calculations. Nobody really knows the actual details unless the data that they're getting it from, the raw data, is going to be reliable. Beyond the headline data, the paper finds that overstatement of investment and industrial output are severe, while official data on consumption and the services sector are more reliable. So they're suggesting that one area might be really heavily inflated and others might not be so much so. And I think that's important to look at these numbers and take it with a grain of salt. You don't exactly know how much, and this is numbers being on employment, maybe it's GDP, whatever you look at. It's important not to put a blanket number on what you think it should be at, 10% higher, 100% higher, double or triple, because certain statistics obviously are going to be padded more than others. This is the report directly out of Brookings. If you're unaware of who the Brookings Institution is, you're talking names like Ben Bernanke, Janet Yellen, Harvard professors, all of these academics that come together here, and they produce some of these reports like this one here, and there's some detail in it that I believe we should all be aware of. But of course, as I mentioned in the introduction, all countries do this to one degree or another. I'm not highlighting it saying that it's China is the one that's doing this, but it's some information that we have that tells us some insight into this one particular country. So of course, we need to look at it, and that would be able to give us an idea of perhaps what these other countries are looking like under the hood. China's national accounts are based on data collected by local governments. That's why when you saw that admission of falsification of the data, it was one locality. It wasn't necessarily on a national level. However, since the local governments are rewarded for meeting growth and investment targets, they have an incentive to skew local statistics. About midway down in this paragraph, I need to read you this. Local statistics increasingly misrepresent the true numbers after 2008, but there was no corresponding change in the adjustment made by the NBS, that is the National Bureau of Statistics. We provide revised estimates of local and national GDP by re-estimating output of industrial, wholesale, and retail firms using data on value-added taxes. They also use several local economic indicators, less manipulated, and so on. At the bottom, they provide some numbers here. Relative to the official numbers, we estimate that GDP growth from 2008 to 2016 is 1.7 percentage points lower, and the investment and savings rate in 2016 is 7 percentage points lower. So these numbers are important to see how significant they can make a change with the way that they present the data. The official stats that come out, they can skew them, they can manipulate them, not just China, but any country. So this is really just an estimate, but perhaps a more realistic one at that. So let's look at some of the charts. Reality check. China nominal GDP growth, annual percentage growth. The blue line is the official, and that pink line is the Brookings adjusted. And you can see the difference in between these two. While we see this huge upswing, perhaps we're not getting the same thing from their adjustments here. Now, they're giving us a number that looks like around 11% for the official stats, and that would mean annual percentage growth. I don't know what their real level is, but that seemed way too high if you ask me. So this is getting the numbers from an outdated source, obviously, while the data is the newest possible reports that are provided. They finish off at 2016. So that's the newest we can get, but regardless, it shows us that things have looked very strange after 2008. That's basically what they're trying to say. After the financial crisis, things got a little wacky in their stats. Reality check. China real GDP growth, annual percentage growth, official, and Brookings adjusted. So that was the nominal. This is the real. And you can see here for a second where these both, the most important thing is that they have both declined year over year, essentially. Since the financial crisis, things looked worse and worse and worse. Now, what is the real number? Is it 5? Is it 10? Is it 11? Nobody really knows, and that's the truth. However, it's lower than what we are being told. So whatever number it is, it always seems to be lower. And that goes for Europe right now, looking terrible, and they're still able to pretend that things are doing just fine. Look at Italy falling into a recession. You can see other countries like Canada barely scraping by, avoiding recession. There are other countries out there too doing the exact same thing. They manipulate their stats, they make it look like things are fine when they're not. And China has done a lot to try to keep this from collapsing. Infrastructure spending. China approved 189 fixed asset investment projects in 2018, including projects high tech, energy, transportation, water, conservation sectors. Aviation infrastructure is getting money. Transport is getting money. Investment in all infrastructure projects approved by China's state planner since last October totaled $173 billion. They did tax cuts. If I scroll down over here, local government bond issuance, cuts for banks, reserve requirements is always going to be a factor. Apparently, they're already thinking about doing this again, always cutting, making it easier, giving more money out. They injected more capital into the system than they ever have before. I'm going to show you a chart on that. You can see where it went at the beginning of the year, and look at what happened. For January, they injected, I believe it was 4.6 trillion, and that's of course not dollars, and you're looking at a massive injection in such a short period of time. They've never gone this far before, but they changed their minds in February. So we'll see which one was the one-off. Was it that massive injection, or was it the following month? So we're going to see that when we get March's numbers that come out. I will definitely bring those to you. But this injection of capital, it really doesn't make its way into the real economy. It's no different than what we saw with the Federal Reserve, no different than the ECB. This is a failed policy if it is to help out Main Street, but of course we know it isn't, and that goes for any country. China's M2 year over year is really sad. And this has been going on for quite a while, even if you ignore this spike that occurred right around the financial crisis. You can just see that over the years, it has been sliding downward. Now, you don't necessarily want to see growth in the money supply at an unprecedented rate, but to see it decrease in a monetary system that literally lives off of all of this money. Without it, it can't go anywhere. And I don't necessarily agree with the monetary system the way it's built, but I'm just saying for it to be sustained, you need to consistently have more money coming into the system, more debt coming into the system, more fraudulence to cover up that fraudulence that was there in the first place. So inevitably, this is going to create a crisis. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you are supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you weren't taught in the school system, well then, these two books have everything that you need. You can get the foundation, history, the asset classes, making money, how to profit, so much more. Check them out at the link in the description if you want the audiobook that's available at themoneygps.com. If you want some more data on China, you definitely want to check out this video, so just click on it and I will see you there.